For more on Target's numbers and some other stock ideas this morning, we want to bring in Stephanie Link. She is Chief Investment Strategist and Portfolio Manager at Hightower Advisors. Of course, she's also a CNBC contributor. And Stephanie, we just saw the Target numbers had turned around. They've been bouncing around a lot this morning. You, in your notes, said that you own TJX and Target Gulp. Were you a little nervous about what they were going to report this time around?
Yes, especially on Target, because the numbers and expectations were all over the place. And I think there were some positives and some negatives, right? So the negative, clearly, it's the guidance for second quarter. Then they cited April was soft, May a little bit soft, too. And that, I think, is directly correlated to kind of the bank situation that in March kind of scared a lot of people. We'll hear what others have to say. So that's the negative. The shrinkage also, I'm not really crazy about that. $1 billion in the last year is a big number. But on the positive side, Becky, they beat earnings.
Let me just clarify that. He said an additional $500 million this year on top of last year. Last year it was north of $500 million. So you're talking about $1 billion that they anticipate over the course of this year.
Yes. And so to me, that's a headwind for sure, right? But everybody is seeing that, unfortunately, right? So that's the negative. I get that, right? But on the positive side, they beat earnings. The comps came in, same store sales flat. I think expectations were something like -1, -2. So okay, pretty good. It's the inventory numbers that they made massive improvements on. A 16% decline this past quarter compares to a 3% decline the quarter before that. And before that, it was up 44%. So they have made massive strides in terms of inventories. And when you have sales up about 1% and inventories down, that's a pretty good combination. And of course, operating margins definitely back on track, not back to the 7-8% number they had been seeing a couple of years ago, but 5.2% is better than the 4.4% expectation and 3.7% in the last quarter. So pretty good overall. Gross margins, and this is going to be the theme, I think, across all of retail. Gross margins are improving because freight costs are down substantially, and they did cite that as well. So I thought overall pretty good. The stock trades at 18 times compared to Walmart at 25 times. I think maybe they're getting back on track, and so I'm pleased to see it up a little bit. We'll see what they have to say on the conference call.
Okay, let's talk about TJX and Walmart. What you anticipate hearing? More of the same, or the margin story is going to be pretty important, as you mentioned, freight costs down, and that's probably helping everybody too.
Absolutely. Freight is going to definitely be the positive theme, I think. With regards to, so Target at 55% of their business is discretionary and 45% is consumables. For Walmart, they have a better mix. 55% is grocery. So where they're having pricing power. And so I think the comps are probably going to be pretty good. 4.8% is expected. International could be high single-digit comps. And then again, yes, freight is going to help gross margins. Inventories will be likely to be down as well. I mean, if Target can make that kind of progress, certainly Walmart is going to as well. With TJ, it's a little bit different story. Higher inventories is a positive for TJ, right? Because they're buying this stuff and they have better pricing. So their transactions and basket probably are likely higher. They are probably going to do about a 2 or 3% comp. Marmax, the bogey there is 6% or better. And again, freight, they actually called out, they expect last quarter, they expect 140 basis point year-over-year improvement in gross margins, and 80 to 100 basis points is likely to be because of lower freight costs. So that was a real problem last year, freight costs. So that should be positive. So I expect a good number from TJ. It usually trades off on the quarter for whatever reason, and so if it is weak, I think it's a good opportunity to be buying it.